the tax filing season is over. I feel like I need some celebration music behind me. Nonetheless, it's Tuesday, it's 2 o'clock. Let's talk tax for about 2 minutes. We're continuing in our series about the new tax reform bill and how it's going to impact you. You remember last week we talked about the loss of the personal exemption, and before that, the changes in the tax bracket and the rates. Today we're going to talk about changes in deductions, and just like in the prior weeks, there'll be some winners and some losers. Let's find out which one you are. If you take the standard deduction, thumbs up to you, you're in the winners column. Here's why. The standard deduction nearly doubled in 2018 compared to 2017. The intent behind that was to basically roll the personal exemption into the standard deduction. So even though you lost that, as we discussed last week, you won't really experience a change if you take the standard deduction and you either a single filer with no dependents or married filing joint with no dependents. If you don't fall in those two categories, then you're joining me in the losers column. Here's why. If you itemize your deductions, they've set new limits on the amount that you can deduct. There's quite a few changes and limitations that were established. Check out my blog post that was released today that goes over all the big ones. Let me cover one of them with you here today. For 2018, the allowable amount for real estate taxes and for state income taxes is $10,000. Unfortunately, for many of my clients, the amount that they pay is greater than that, so they're going to lose that tax benefit. And for many taxpayers, that change is going to increase their taxable income and potentially bring them into a higher tax bracket. So the big question is, okay, tell me CPA, how do I fix it? Now for this one, it's not so cut and dry. You really need a customized plan to figure out how to offset that change entirely. Well, let me give you a modest change you can make that will serve to help. And that is the deduction for charitable contributions was actually increased. The allowable amount that you can deduct is higher in 2018 than ever before. So you may not be able to fully offset the loss in taxes of the deduction with charitable contributions, although my nonprofit clients would love for you to try, but that will at least be one small change you can make that will reduce your taxable income and reduce your taxes for the year. So once again, check out the blog post to get all the details on this change. If you have questions, please contact us. Otherwise, we'll see you back here next week, same time, same place.